for starting your week with us. Hello and welcome to Business Daily. I'm Lee Ji-yoon in Seoul. We have plenty on our plate today, so let's get started with the day's highlights. As the APEC meeting wraps up, leaders agree to fight growing trade protectionism and keep markets as open as possible. Older Koreans are staying in the job market even after they retire, with the number of workers at 50 and above surpassing the 10 million mark. These stories and more coming right up. This year's APEC summit has come to a close in Peru, with Pacific Rim nations, including Korea, agreeing to realize a massive China-led free trade deal. Korea's prime minister joined other world leaders in stressing the continued need for free trade for balanced global growth. Our Connie Kim reports from Lima.
The 21 economies that make up APEC vowed to fight all forms of protectionism as a curtain came down on this year's summit in Lima. Wrapping up a meeting where heads of state discussed trade promotion in the region, the 2016 Leaders' Declaration said members reaffirmed their commitment to keep markets as open as possible. With the summit coming at a time when global concerns linger about potential U.S.-led protectionism under soon-to-be President Donald Trump, the declaration also reiterated APEC's commitment to realize a China-led free trade area of the Asia-Pacific. U.S. President Barack Obama, on his final international trip as president, said the United States should not retreat from global trade.
I believe that TPP is a plus for America's economy, America's workers, American jobs. I think not moving forward would undermine our position across the region and our ability to shape the rules of global trade in a way that reflects our interests and our values.
South Korea's representative at the summit, Prime Minister Hwang Kyo-won, also said the world must break away from protectionism and work towards strengthening peace and prosperity to achieve comprehensive growth. To this, Prime Minister Hwang said an institutional framework must be set by pushing for the FTAAP. The free trade area of the Asia-Pacific was first launched at the 2014 APEC meeting in Beijing and is expected to add an estimated $2.4 trillion to the global economy. This year's APEC summit came to an end with a concerted voice for trade liberalization amid fears of global protectionism. Member states will work toward this mission before they meet again next year in Vietnam to discuss the details of the region's trade policies with the new U.S. administration. Connie Kim, Business Daily, Lima.
Korea's exports are showing no recovery signs in the month of November so far, as industries brace for the more long-term impact of a potentially protectionist Donald Trump presidency in the U.S. According to Korea Customs Service, Korea's outbound trade in the first 20 days of November came in at $27.2 billion, a 0.2% decrease from the same time last year. Exports of semiconductors and steel products both registered growth, but it was not enough to offset the double-digit losses in automobiles and wireless communications devices. Trade bound for China and the U.S. both fell in the cited period, while exports to Vietnam expanded by 24%. Exports to the EU and Hong Kong also registered gains. The financial soundness of companies listed on Korea's main Kospi stock market appears to have improved this year. Korea Exchange and the Korea Listed Companies Association says firms saw their average debt-to-asset ratio fall to 111% as of the end of September, down about 6 percentage points from the end of last year. The report is based on data available from 622 companies that settled their accounts in December. The debt ratio is a key indicator of a company's financial health, reflecting the proportion of its assets that are financed by debt. The Korean equity market closed with a slight downtick last week, and conditions are still looking sluggish in the first trading session of this week. And we're now joined by our markets contributor Choi Jin-seok to talk about market trends and what to look forward to this week. Hello, Jin-seok.
Thanks for having me.
All right, so how did the Korean stock market do on this Monday?
The Korean equity market failed to rebound on the first session of the week. The Kospi was mostly flat, closing at 1966.05, down 0.43% compared to the previous session, while the Kosdaq plummeted by almost 2%. The Kospi fell to 1962 in early hours, but buying from foreign investors lifted the index into positive territory once and limited further declines. The Kosdaq was hit harder once again after news surfaced about Chinese authorities banning Korean TV dramas, movies, and celebrities from appearing on local broadcasters. This spooked sentiment in sectors related to the so-called Korean wave and ended up dragging down the entire Kosdaq index.
Now, unlike the Korean market, equity markets in advanced economies saw their positive momentum continue into the new week. So you have to wonder, though, if there's any skepticism towards the sudden surge in share prices.
The so-called Trump trading, which is seen in the rising dollar, robust advanced markets, and sluggish emerging markets still seems to be in action. Three main indexes in the U.S. stock market all rose on a weekly basis with a 1.6% surge on the Nasdaq. But fears of a sudden correction have been rising too. First, the market has been going up too fast. The Dow Industrial Average skyrocketed by 5.4% within a week after the presidential election. Second, the dollar value and U.S. Treasury yields have been rising along with the stock market. These asset markets tend to move in the opposite direction compared to the equity market. Of course, if improvements in the real economy have led to rising dollar and Treasury yields, investors do not have to worry. But it is still uncertain whether economic fundamentals can support the stock market rally.
And that's probably why investors need to take a closer look at future market events and to see if this rally is indeed sustainable. So with that, what are the market events lined up for this week?
As the focus of global financial market has moved towards the foreign exchange market, investors are expected to pay a lot of attention to FOMC minutes released on Wednesday local time. CME Fed Watch, a futures market betting on U.S. interest rate hikes, now shows a 95% possibility of a December rate hike. The minutes will give hints on what conversations were made during the FOMC meeting last month, and if there is a clear signal for a December rate hike in the minutes, the value of the U.S. dollar is expected to rise further, which will not be good for the Korean market. The U.S. dollar index rose by 2.2%, marking the highest since 2003 last week. U.S. housing data will be another focus in the perspective of the FX market. The U.S. market will be closed on Thursday due to Thanksgiving, which means we are getting closer to holiday shopping season.
And last week, oil prices rose for the first time in 4 weeks, and the commodity market is still expected to draw a lot of attention from investors, right?
Right. The price of WTI for December delivery surged by 5.3% last week, marking the first weekly gain in a month. The market reflected expectations for the agreement to cut production among OPEC producers. OPEC member states had tentatively agreed to keep daily production between 32.5 to 33 million barrels, but they haven't set production caps for individual nations. Oil producers are expected to discuss details at the end of this month. As Donald Trump's victory raised expectations for more inflation globally, a rebound in oil prices can give boost to global asset markets as well. In this regard, weekly oil inventory data will be another market focus this week.
But despite a rally in advanced markets, the Korean stock market seems to be kind of isolated from all this positive momentum. So what could be a catalyst that could lift the markets?
Right. Due to rising dollar trends, experts say foreign investors won't likely be net buyers on the Korean equity market in the near term, which is why whether foreigners return to the Korean market will be the key for overall sentiment this week. Fortunately, the so-called trend of Trump trading seemed to be weakening towards the end of last week, and the national pension funds comeback to the market last week is also expected to serve as a positive catalyst for this week as well. Most importantly, earnings momentum might give the markets a boost. LIG Investment and Securities says Q4 earnings for Korean companies are expected to be the best in 2016. This is after Kospi 200 companies recorded a 16.8% growth in operating profits in the Q3.
All right. Thank you so much for all that today.
Thank you.
Hyundai Motors Ioniq Electric has been ranked the most fuel-efficient electric car in the United States. According to the U.S. Environmental Protection Agency, the electric car gets 136 mpge or miles per gallon gasoline equivalent. mpge is a measurement used in the U.S. to compare the distance traveled per unit of energy consumed by conventional vehicles. The BMW i3 came in second, followed by the Chevrolet Bolt EV. Now, the agency says the annual cost of charging the Ioniq Electric would come to around $500, which is about $50 less than for the BMW i3 and the Chevy Bolt EV. Chinese TV producers are closing in on Korea's global lead in terms of market share. According to market researcher IHS on Monday, the likes of Samsung and LG Electronics were holding on to the top spot with 32.2% of the world's TV market in the third quarter. Chinese manufacturers were close behind at 31.9%, and this comes as the Beijing government continues to invest in China's tech industry, which is finding particular success in cost-effective products. Rounding out the top three was Japan, and combined, the three East Asian economies produced 78% of TV sets bought in the July through October period. Korea's rapidly aging population has over the years been transforming the landscape in the country's job market. While more older workers stay active, younger Koreans face the burden of unemployment. Our Shin Se-min reports.
Older Koreans are more active than ever, often staying in the job market even after retirement. Statistics Korea says the number of workers at 50 and older surpassed the 10 million mark in the second quarter this year, up 272,000 compared to the same period last year. It's the first time the figures surpassed the 10 million mark. And this trend has extended into the third quarter, with figures reaching 10,211,000, accounting for 38.5% of the country's entire employment. The number of older workers has been on a steady rise in the past decade, posting just below 6.5 million in the second quarter of 2006. The agency attributed the rapid increase to the growing number of baby boomers born in the years between 1955 and 1963. That population reached over 8.2 million as of the end of the third quarter, while Koreans in their 30s and 40s saw their population drop by 88 and 56,000 respectively. With Korea's low birth rate, the older age group is larger than any other generation, and it appears to be maintaining its footing in the job market even after people hit the newly recommended retirement age of 60. But it's quite a different scene for young Koreans. The unemployment rate for youth aged 15 to 29 gained 1.1 percentage points last month to settle at 8.5%, the highest on-month gain for the month of October since 1999. The number of jobless youths in that month surged by 54,000 compared to the same period last year. Market watchers say the solution to this imbalance is to increase quality jobs for various age groups in different sectors, adding that it's the right path in embracing both the older and younger generations. Shin Se-min, Business Daily.
Just a decade ago, an open commitment to staying single would have been heavily frowned upon. But over the years, people's attitudes toward getting married have changed a lot, along with socioeconomic conditions. Our Lee Ju-young has this report.
Marriage is no longer a necessity. A recent poll shows this major change in attitude in a country where tying the knot was long considered a must.
If I want to get married, I would at least need a house, but I can't save up all that money in my 20s.
According to a biannual survey on nearly 40,000 Koreans by Statistics Korea, those who believe marriage is essential in life dipped to about 52% this year, extending the decline seen since 2010. It says much of this sentiment has to do with the protracted economic slump that's making it harder for Koreans to bear the burden of marriage and child-rearing. The statistics agency added that housing and utility costs surged nearly 52% since 5 years ago, making it harder for those in their 20s and 30s to spend money in other areas. They're also seen to be more focused on savings and pension plans starting from a young age, with heightened concerns about an aging society and job insecurity.
I do wonder whether marriage is necessary because it costs a fortune.
With an increasing number of people pursuing different definitions of living happily ever after, the concept of a traditional family is also changing rapidly. Lee Ju-young, Business Daily.
And that wraps it up for today, but we'll be back tomorrow with more at the same time, same place for your Business Daily. Until then, goodbye.